Welcome traders to the third lesson. Here starts my favorite part because it's a part when we start the learning process. So the first lesson about supply and demand. This is the very basic stuff I use on my markups and my trading, because without supply and demand I would be trading blind, usually from so-called no man's land. So the supply and demand tells us how the markets move. It makes the price move up or down, and there's also one important rule that the higher the time frame, like here the M30 or even maybe H4 or the best one, so the stronger the zone is. We cannot compare the H4 zones with M5. But in other side, I am a scalper. I believe most of you are also scalpers. So we can use the M5 zones just for short moves without expecting some really great home runs, like for 100 pips on GU or 10-15 pips on points on ES. So the M5 zones are good for a quick entry, like get in, get out. In this video, I want to show you the 5 ways of marking and finding the zones. The first 4 I will mention are the greatest. I use them every single time. And the last one is more difficult, just really for quick scalps. But I will also explain it. The first way, the very basic one, we can use even without the tools. It's just like a good exercise to train your eyes and brain how to spot areas of interest, the initial areas we see just right after we open the platform. But please also do not be shy, and if you have any questions or want to ask about anything, please use the Discord server, and there's a new channel, course related. So everything about the course you can ask there, like if you want to ask if such zones are good, or why some zone didn't hold the price, etc. So please don't be shy. Don't send only private messages. I believe that not only me, when I'm, for example, absent sometimes, that also other members will really help you. Good. So the first way is by finding the indecision on the market and what I call leg out. So indecision candle is like this one. I'll zoom this in. Yeah, we have a body and wicks on the both sides. So the indecision candle form when there are equal numbers of buyers and sellers. So we could say no one is in control of the market. Yeah, I will mark this like that zone. So please don't watch here right now. It doesn't matter that the price broke that zone. This is what should be marked before that move, of course. So about entries we'll talk later, because these are just markups. We can mark a lot of zones. Here could be also another potential supply. Yeah, because there were indecision market and leg out. Here's also even bigger leg out. And if the move is very strong, yeah, the price is moving heavy from the zone, that means that the more out of balance supply and demand is in that zone. So it means a heavy order was placed. Yeah, very aggressive sellers in that case were in the market. So heavy orders got filled. Here we could also mark the supply, yeah, because there was definitely a lot of aggressivity in the market. So we could say that we have, like here, 3 supply areas. This is based on just a candlestick chart. Yeah, I'm loading my charts and I see the first picture, the first initial zones. And also something important, every time the price approaching some zone, it's making it weaker. So this is why I prefer to use only the zone one time. Yeah, so if price is reaching some area, I see the reaction, or maybe I will just correct this. Yeah, this is the whole move. I'm just not watching the zone more. So we can see also that this zone after first reaction was completely broken. So these are the supply zones. Oh, sorry, not this. And demand also in the same way. Yeah, we are looking for some indecision and the most important, very heavy move out of the range or of the zone, so which can confirm the aggressivity. Yeah, the aggressive buyers in that case broke that range and ran away. The price was delivered to the supply. So here would be my demand zone. And again, with demand zones, I'm also using these one time. So if I would find with footprint charts and with my criteria entry here, I'm not looking for a zone, for this zone and potential future entries next time. Just for me better to remove this or just make the zone smaller, that I know that here was a reaction and I don't want nothing more from that area. Just my advice. Yeah, you can use it more time. It can happen that price can hold. It's so strong supply or demand that it can hold the price for 3 times, every single time showing good potential reversal. But in my opinion, it's better to be patient and wait for another opportunity. Just one-time zones. So again, really don't be scared that some zone is broken, because I hope I can show you how to see the correct entry. Yeah, because this is why I don't use limit orders. Because finding a zones is really easy, like that one, like here previously, but there were no reactions. Yeah, so it's not just to find a zone and mark it on the chart and place limit order. We should react correctly for the to see the passive orders and aggressive orders. But about this next time, of course, a few lessons later. Just want to show you in this example, the basic way to mark the zones, that we are looking always for a fast, good move out. Okay, so that was the first way. The second way is finally with using the real volume tools. In this example, I would like to show you this on gold and the volume profile. Volume profile shows us the accumulated volume, so we can spot where was the biggest interest in the market, in which price levels or price areas, and where was lower interest. Let's say we are looking for a setup in this day. So I'm using the volume profile for a previous day to see how the price behaved. So very easy to spot. that here in this range there was a lot of accumulation of the volume, yeah, before the price shot up. So there were two areas, yeah, we can see this from this range, very high volume, and also lower, very similar volume. So that's the areas of interest. Here comes one of my favorite rules and laws about supply and demand, that if we have two zones very close to each other, it comes a very big probability that the price will reach the second zone. It's same with supply and demand, supplies, sorry. When we have two supply areas very close to each other, it's really high probability that he could be the first invitation, and on another zone, the true big order waiting to be filled. So that would be the first markup. And here also we see the very high volume, and here was lower. So that looks like a supply, also with a huge aggressivity to move the price down. So even without the volume profile, we could be waiting for that area in the future. But I love to use the volume profile because it confirms that really it was not just a move, for example, in the end of the session, like a range, but really high volume appeared. A lot of orders got filled here. There was the fight between buyers and sellers, as we can see also in the delta. So for me, important zone to wait for future. But let's say that we are waiting for the price delivery to the demand, and price reached this area, unfortunately by the end of the day, but it reached. Yeah, so where could be the safe TP? Yeah, it should be trading like from the zone to the zone. So on this range we also see the high volume on this area and also this area. Yeah, there were good orders were filled, so we could also mark this as a potential supply. Yes, if price reached our zone, we found all the entry criteria, so then no need to reach for believe on a home run to the highest zone possible, but always the first one on the way. So the volume profile, in short words, I'm looking for the areas with high volume. Here could be also the potential and for the future. If that zone would be taken, maybe the zone above would be also interesting for some sellers. So that was the second way. For me personally, the volume profile is most important when I'm preparing for my trading. Yeah, the first bigger zones I'm marking on with the volume profile tools, and then the zones which I will mention very soon, I'm using as a scalper. It's the very short-term areas I use for this volume and delta, and for this purpose I will use GU. The zones based on the candle volumes also are important for me because it shows how aggressive order was filled during this short period of time. And take a look on that volume here. Yeah, this is definitely a very high volume, just almost 2 hours after London, and that was this one candle. So what is important for me? this should be definitely higher volume and also not too big candle. So like not news candle like CPI candles or NFP news candle, because these candles are like 30 pips to 50 pips big. So that would be nonsense to mark such a fat area on our chart, especially that we are scalpers. Yes? So the smaller the zone, the better, because I don't want to use the 50 pips stop loss. I prefer to use 10, maybe sometimes 12. But I have fixed one. I usually most of the time use 10 pips on GU. So I'm looking for a high volume candles. And very similar way is looking for a delta zones. And what is delta? I have always opened this tool on my chart with the volume. And delta shows us the difference between buyers and sellers. So for example, if in some period of time, like in this case 5 minutes, there were 100 buyers and 60 sellers, the difference is 14 plus. So that means that in this period of time we should see more buyers than sellers. So by logic, the price should be moving up or be ready to move up. In that case, I can see here a very negative delta. So by logic, here should be in this area even 2 candles. In this area, there should be more sellers, right? For example, 200 sellers to just 15 buyers. So by logic, the price should go down, but it doesn't. Yet the price reversed up. So I'm marking this area and I have my zone. Also could be smaller with the second candle. I don't have here any rule. Just in this period of time, there were more sellers. So the SMC traders could say that we have here trapped sellers. But we see this with some confirmation with the real volume. We don't need to guess that here are trapped sellers, but we see this. In the next part of the course, I will call this not trapped sellers, but absorption. And then we will talk about passive orders. But in this moment, in this part of the course, we could call this as trapped sellers, by these candles. So the volume zones and the delta zones are very important for me. So if I see, for example, the main zones based on the volume profile, and then in live market, that something is created also inside these zones, it's for me double confirmation that I see huge demand, and then also inside this demand it's happening the preparation for a buy setup, because I see the negative delta zone. It's for me really, it gives better self-confidence that what I see is really the good bias. So this was the third and fourth way of marking the zones. And the last one, the most difficult, but I want to show it for you, is based on the tool Big Trade. So it's hard to spot the correct areas. I use this only for fast scalping. I read this live, and I just don't want to see your disappointment that I'm sharing some of my trades, and in the explanation states that I use big trade zone, and then would be questions like why, how it is, how did you do this, etc. So once again, this is the very very difficult area to spot correctly. The big trades usually happening at in the opening of stock market and also in the end of the session, where everyone is trying to prepare for a next trading day, and they, in my opinion, they're placing large orders by the end of the day. So here need to be some understanding of the moves. If here at the end of the session I see big sellers activity, these zones are red, that could mean that maybe the next day we will see also bearish move from that zone. But if the market opened above, so it automatically should change with high probability to the demand. So it's not a supply right now, but the zone was broken. Broken during the Asian and London session. So the price was delivered above. So it means that probably more participants want to see the bullish market rather than bearish. So that could be the area of interest to look for a buys. And the buyers activity appeared here. Below the zone, some big buyer appeared. We have price manipulation, but I will talk about liquidity grabs in the probably 2 or 3 next lessons. I just want to show you how it works now in terms of finding the supply and demand. So by the end of the session I would mark this as a supply, potential supply, but then next day I would make a correction that okay, this is very big chance that we have now new demand. Even by the opening of the session there's a really high chance that the trapped sellers want to close their failed positions at the break even. So we could expect at the beginning of the day the move down and then watch if really the buyers are so strong to move the price up. Here again, by the end of the session there was some trapped seller and the price, unfortunately to him, moved the price moved up. So here's also potential zone. Yes, because when the New York session stock market opened, the price was same as here, above that seller's area. So high probability that the price will move down. Just to fill the gap and to close the failed position at break even. So these are the 5 ways of marking the zones. This is really the strongest. This one honestly can give you a lot of confusions, but I hope that after a time it will really be helpful for you when you see live that big order is placed. The most important are definitely using the zones based on the volume profile at the beginning of each session, to mark them based on the few previous days, and also for intraday trading the volume zones and also delta zones. If you have questions to this first this first lesson about knowledge, please use the Discord channel course related. Thank you for watching, and let's meet in another lesson about key levels.